in the markets. Jeremy Siegel, professor of finance at UPenn's Wharton School of Business. And Professor, the new data points we have probably surround the most important, perhaps, market participant, and that I'm not saying directly in the stock market, but we all talk about the Fed. We talk about Jay Powell a lot, and we may see tapering sooner, maybe than people thought. We may see a rise in interest rates sooner, maybe than we previously thought. Does that factor into your calculus for whether we stay really bullish?
Yeah, and absolutely. I look at these inflation forecasts that the Fed put out. I don't find them credible at all. 4.2% for this year, 2.2% for next year. We're going to have much more inflation. And I think we got a little bit of a reprieve last month, but everyone knows inflation is running much more. And a lot of the supply side problems, we didn't hear the word temporary anywhere near that as much as we did before. They're going to come to the fore in the fourth quarter. I think we're going to have a couple of bad CPI reports. And, it may not be until November, December, but, Powell opened the door saying, if things get worse, we will have to taper faster. If that happens toward the end of the year, that would rattle the market.
So are you less optimistic than you were last time you were on now, Jeremy?
Well, I think we can have another. I think the road looks clear ahead for a month or two because the Fed will continue with its program and the taper ending in the year. But I think when we see worse inflation, the Fed is going to be pressured, and that's going to disturb the market. And that's down the line. We could have a market up 10% before you get another 10% drop. So that's hard to picture. But I see problems early in 2022 with the market contending with the Fed, pressuring the Fed to go faster and bringing that dot plot, further up from the very end of next year to perhaps the middle of next year. And I worry actually about an overreaction because a lot of that inflation that we're going to have, I think is already there in the pipeline. It just has to show up in the statistics. We've talked about how housing is way understating the inflation in the CPI and the other statistics. And that's just going to come through the pipeline. The Fed can't really do anything about it. If they panic and say, oh, my God, we're way behind the curve, let's jack up rates, that's bad. That will really trouble the market and the economy.